back in action is Kevin Green, who joins me now to help up the setup for the action today. And I suppose we should start with the conflict in the Middle East, of course, Kevin, given, of course, we've had this update from Trump now seemingly injecting another dose of uncertainty into these markets, saying that US involvement, he could be making a decision on that within 2 weeks. And I suppose the big question for the markets is that could be tomorrow or in 13 days from now. Good morning.
Good morning. Well, as well as not at all. We've seen these 2-week notices for several different issues here that have not really come to fruition. So yes, the market is actually in the green at this point in time here. We have seen the conflict kind of escalate over the last 24 to 48 hours. And we did actually see the E-mini S&P 500 down in the session yesterday in the shortened session for the holiday. The futures were actually still trading, hitting down to that 20-period moving average on the E-mini S&P 500. But we did see a bid after this announcement that President Trump is going to take up to 2 weeks in order to make a decision. That doesn't mean that he's going to be holding for 2 weeks, but it just means that he's giving himself a little bit of wiggle room when it comes to this situation here. And the market did actually catch a decent little bit after the fact. And we are actually seeing a little bit more of a move to the upside here over the last 20 minutes or so, Sam, after news reports, and you're seeing social media posts as well that Iran is actually open to some form of negotiations when it comes to their nuclear policy, which is why we did see a nice little move to the upside going from red to green here. So still some uncertainty. Let's see if we are able to get some type of negotiated settlement when it comes to this particular issue. And if so, that probably is going to be bullish for the markets, but I think we probably will still see a lot of volatility or a fair amount of volatility and some uncertainty until we actually have some concrete plans on how this is actually going to move going forward.
Yeah, so staying out of the conflict for now, it seems, buoying European equities overnight seemingly as well. So interesting to see some of that follow through, as you mentioned, with that update this morning with regards to potential coming to the table in talks. That's certainly something that Trump had been talking about. I've been hearing that on the trading floor this morning, perhaps speaks to, as you say, while we've seen the futures tracking higher this morning. But of course, we are still talking about another can that's being kicked down the road, seemingly, and that is what we got from the Fed earlier. Remembering, of course, we had a holiday yesterday, so the markets have had some time to digest this. But I mean, how are you looking at this with regards to how the markets are feeling about some of the uncertainty here? I mean, they have been talking about how the uncertainty has sort of backed off for now, but still remains elevated, particularly with their commentary around growth and the inflation picture.
Yeah, we probably saw a little bit of a mixed reaction. I would say it was kind of a muted here that we saw on Wednesday when it came to the Fed meeting and the commentary from Jerome Powell. Now, obviously, they did hold rates at their current level. They still have 2 rate cuts being priced in for this year, but they did actually reduce the amount of rate cuts that they are expecting in 2026 and 2027 by 1 rate cut for each year here. And once again, they're kind of talking about the uncertainty when it comes to policy, as well as the fact that we have not seen the tariffs actually materially be reflected within inflation, and they believe that it's only a matter of time until it does so here. They did actually revise their GDP forecast for 2025 lower to 1.4%. That's down 0.3 percentage points from the previous summary of economic projections. And they also increased their inflation forecast for PCE to 3%. And now core PCE, they are expecting that to come in at 3.1%. So they are still pricing in some pricing pressures here because of tariff policy. But once again, still being mindful of their dual mandate, and also talking about the flexibility that they have as they can adjust pretty much on a dime if they do see fit here. So once again, I think the market was kind of mixed on that, on the report, as well as the commentary coming from Jerome Powell, and still really kind of focusing on the geopolitical risk that we have around the world. And so at the end of the day, we'll see. We have some more economic data over the next couple of weeks here that could actually sway their decision either to the upside or downside here. But the labor market continues to hold in. Inflation is going in the right direction, at least for now. And they are not seeing any issues when it comes to credit markets. So they're pretty much on hold for now. But we only have 4 meetings left. And the market's really kind of pricing in that this September meeting will be the first rate cut, as well as December. And that September meeting will actually provide another update to the summary of economic projections. If you kind of look at the past rate cuts, if you're not really in a rush, you probably will wait until you release another update on the Fed's projections moving forward to also provide that rate cut here. So it seems like the stars are kind of aligning for September to be on the table here.
Oh, absolutely. And it seems to be somewhat of a phenomenon at the moment with regards to the market performance that we saw on Wednesday, because I think it's the last 10 Fed days where we've seen an initial spike off the back of the decision, whatever it's been, and then sort of those gains coming off and cooling as that commentary and that press conference has gone on. But then Trump, of course, had some things to say about that decision and some of the commentary as well. But we're also tracking these lines that Trump has once again delayed the TikTok ban, so giving it another sort of 90 days of breathing room here. I believe that would bring us to September 17th. This is the third time that we've seen that. I've seen one China watcher out this morning calling this TikToko, but I'll park that there. What do you make of all of this, Kevin?
Well, that's the first time I've heard of that, but obviously, yes, you are seeing the deadline being kicked down the road. And once again, you kind of apply this type of situation to maybe some others on the geopolitical front here. They're still looking for an American buyer and or an American company that could actually take a significant stake within the company here. But you are seeing the executives from TikTok appreciating this move or this delay for now, citing the fact that 170 million U.S. users currently are on the platform, as well as 7.5 million businesses. So this is obviously a big mover and a big economic engine, not only here in the United States, but around the world. And so trying to find a resolution, trying to find the appropriate buyer, and then also trying to get China to approve any type of deal moving forward, I think is going to be key here. So once again, looking at another delay, I don't think the market's really kind of focusing on it too much. This is one of those situations where it seems like when it gets done, it'll get done. And that 90 days is probably not it's not probably enforceable so much for the administration. It seems like they were really trying to just delay this until the perfect opportunity does come around, if it ever does.
Yeah, and it's going to be interesting, obviously, to see how that also plays into the US-China negotiations around the tariffs as well, whether, of course, Xi Jinping is sort of relieved or happy that obviously this app gets to continue over here in the US. But let's bring it back to the markets, Kevin, because we are looking at a bit of a Freaky Friday. We've got a quad witch day today. You don't have to tell me about witching hours. I've got a toddler, but this is twice the size of a toddler. This is quadruple witching hour. Do you expect some volatility in the final hour of trade today?
Yeah, it definitely can be possible, as you're kind of talking about. We're going to have approximately over $4 trillion of a notational value running off today. And we will actually start that at market open, where the AM options for the indexes will expire. And then you will also have the June contracts for the futures contracts for the indexes also expiring. So that will kick it off. And then we will have the equity options, as well as some of the other options that are going to be expiring at the end of today's session. So usually on quarterly option expirations, we do see a fair amount of volatility. Usually the first move is not really the one that actually sustains or ends the day. Maybe today will be different, but we have seen some pretty decent shifts in technicals, as well as fundamental trends in markets on these quarterlies. And so I'm going to be interested to see how we actually react. And do we actually possibly get to all-time highs today? I mean, I think that's not outside of the question, just given the environment that we were in, as well as the mechanics that are going to take place. So I would say kind of keep your head on a swivel here today, and let's see how the market's going to be able to hold up. Unfortunately, if we have negative news flow, that could actually create more of a catalyst for a move to the downside, just given today's events. But if we have some positive news flows, who knows? I mean, we could make another 100 points, 150 points to the upside today. Anything's kind of possible on days like today.
Absolutely. Anything is possible. Thanks so much, Kevin Green. We're going to leave it there. We'll talk to you a bit later. Happy Friday.